Hello, everyone. Welcome to the IX Trading Room with me, Richard Perry, Market Analyst for INFINOX. Now, we're going to be talking about a few market movers today, and just basically we're going to be on for about 20 minutes, just discussing some of the most important things that we've got happening at the moment and we've got coming up as well. So I hope to be about 15 minutes or so in the webinar, and hopefully it will all go well. This is our first time that we're going to be doing on YouTube and also Instagram. Hopefully, welcome to all the people that are joining us from Instagram, and it'd be good to see you. And 1 second, I just need to post a little something. Hold on 1 sec. Okay, so yeah, and we're just going to be starting off with just a look at how Forex markets are doing at the moment. We've had some big moves from the Japanese yen today, big moves also from some dollar positions. We've had a lot going on in terms of fundamentals, and we're going to see how that's playing out through the technical side as well, and how markets are responding to all of this. We're going to start by looking at euro dollar. What we've seen is that euro dollar is in this consolidation phase at the moment. We've had this breakout, but we can see this big uptrend channel, and that's a strong move that has been developing over the last three months or so, and it shows little sign of stopping. And the reason is because what we have is this continued weakening of the dollar. The US dollar has been falling away since the beginning of October, and that has come as markets have continued to price for a less aggressive Federal Reserve monetary policy. Now, monetary policy is crucial for major markets, certainly Forex, but also across indices and also commodities as well. But primarily, it is very important for Forex. Obviously, the most important factor is into bond markets, but bond markets then play into Forex quite considerably. And what we can see here is this dollar, which has corrected in the past 3 months, really strong correction. And that is a big factor behind what we've seen in bond yields falling over. This is the 10-year, and that has had a key move through Forex markets generally, and that has weakened the dollar. That weakening of the dollar has pushed euro dollar strongly higher. We can see that move, that breakout above 107.85. That was a really important moment for euro dollar. That was the May high, as you can see here, the May 2022 high. Breaking above that again is another key resistance that's been taken out. So that was a key moment, and that move is now holding. But old resistance becomes new support. So what we've seen is this breakout on euro dollar, which is holding the move. So that old breakout around the 107.35 up towards 107.85 area, that is now new support. That is a key area of support. You can see that holding within this uptrend channel. So I'm looking at this as buying into weakness, and I think that euro dollar has further legs to run in this move high. You can sort of come back a few levels on the M25 platform. You can see this next key band of resistance. Look at that. That's between 111 and 112. Basically, 111 to 112, big figure, is the next target area. I'm looking to buy that euro dollar into weakness. Now, what we have seen today is that the dollar has been pretty volatile, actually, to be honest. Now, US economic data continues to suggest that there is a move towards a recession in the US. Now, that is coming out through the data, that is coming out through all the survey data, the business surveys, like the Federal Reserve regional surveys that we have. We've had retail sales, which is in decline. We've had industrial production, which continues to fall away. This all sort of points towards the US moving towards a recession, and we've also got the less pricing pressures as well. So this is all adding into the US dollar continued correction that we've got here. So I've just realized I was looking into the wrong camera. I should have been looking into a different camera. Anyway, so what we've got is that move there, and on euro dollar it's sort of been a bit choppy, been a bit of consolidation, but essentially it is still trending higher. Sterling dollar is a very similar to an extent, but sterling dollar has been accelerating the last couple of days. It's sort of been more of a move where the positive moves through the pro-cyclical currencies, which is currencies such as the Australian dollar has benefited in the last few days, and also sterling dollar, as sterling has also benefited as well. And sterling has accelerated high towards this key resistance, which comes in at 124.60. That is a key level of resistance that's been on sterling dollar that is now being tested. And if the sterling dollar can break out through that level of resistance, we can see that move can then start to move towards the next area, which is 126.50. That is a really important level of resistance. Again, that is the May high from 2022 on sterling dollar. And said earlier that euro dollar has already broken that resistance, while sterling dollar looks to be moving towards that level of resistance as the next play. So that is seemingly now what we're looking out for on sterling dollar. If it can break through this level of resistance that comes in at 124.45 area, breaking through that on a closing basis is bullish, and that would be opening the next level higher. Essentially for sterling dollar, I continue to look at this as well, you've got strong momentum, just putting on the uptrend channel, which essentially sterling dollar is sort of playing out through. And again, it looks strong to buy into weakness, but at the moment it's only around the midpoint of the channel. If it can break out through that resistance, it really does sort of then open towards the upside. So that's a strong move that we can see through the uptrend channel, and breaking out would be positive. Now we've got UK retail sales coming out according to my on Friday. So UK retail sales will be an important volatility factor early on Friday morning. Be careful, anyone holding sterling positions open through to Friday morning needs to understand that UK retail sales will be a volatile mover for cables. So and any sterling positions that are taken. So sterling dollar moving higher, but we've got that volatility factor of retail sales for the UK on Friday morning. Now turning to dollar yen, the dollar yen has been a really significant volatile mover today. We had the Bank of Japan, which came out with monetary policy this morning, did not change monetary policy. That was a big surprise, and it really did sort of sharply weaken the yen initially, but there's been a complete retracement of that move. And the reason is that basically markets are taking that, okay, the Bank of Japan didn't move and didn't change monetary policy this time, but it pretty much will do. There's a new governor of the Bank of Japan coming in, I think in April, or is it March? Actually, March. And the fact that the Bank of Japan is sort of priming markets to remove its ultra loose monetary policy means that the likelihood is that that new governor probably has the way open towards that monetary policy tightening, and subsequently that's why the yen has re-strengthened this afternoon. And that has meant, look at this strong downtrend on the technicals, a spike higher to 131.57, has retraced all the way back to 128.30. So that's a huge move. That's a big round trip that we've seen in dollar yen today. Big move higher, then a spike back lower. But essentially what we see in dollar yen is this continuation of the big downtrend. And that is because markets continue to believe that the yen will be strengthening in 2023. and the Bank of Japan is only essentially putting off the inevitable. The Bank of Japan will be sort of moving towards a more hawkish positioning, or certainly a less dovish positioning in the coming months, and markets are positioning for that already. And what we can see on the technicals is, look at this 21-day moving average, this red line here. Look how often that has been the basis of resistance in recent months. It's an incredible indicator here on dollar yen, and that continues to play the case. The spike towards that this morning, back down lower, big resistance overhead, and it's just close. It looks like it's about to close back underneath 129.50, and to be honest, it looks like dollar yen is on the way towards a test to the 128.30 area. So 128.30 will be an important test, I think, for dollar yen in the coming weeks. Sorry, 126.30 will be an important test for dollar yen in the coming weeks, and I think that will be something that dollar yen moves back towards. I mean, look at this momentum, very negatively configured, all suggests selling into strength continues to be the case on dollar yen. Let's have a quick look at gold. I've been a bull on gold for a while now. With this uptrend that continues to develop on gold, the recovery has been impressive since the beginning of November. It's been a massive recovery. You completed this base pattern, had a retreat to the neckline, found support, and is gone again. And it's a really strong move. Very, very impressive recovery that we're seeing in gold. And again, another market where the momentum is telling us buying into weakness. Is a little bit stretched on the RSI near term. The relative strength index is over 70, starts to tell us that it's a little bit stretched, and it's a warning sign that you might get either a consolidation or a little pullback. What we've seen in the last couple of sessions, 2 or 3 sessions, is this just minor drift. It's only a slight amount. You can see the RSI is only unwound to 70 from that sort of 74 area, but I think that what we've got is that any unwinding move back into support is a chance to buy on gold, and I think it's a move that will continue to play out, especially seeing as we've got this uptrend intact. Gold as a recovery play, certainly having broken out above 1880. Look at this old pivot band. I'll go back a couple of levels here. This old pivot band here, 1880 to 1890. Old pivot band becomes new support now. So I think any sort of retreat back towards that within this uptrend, that looks like a chance to buy. So that would be a strong opportunity, I would say. So I'll just have a quick look at the calendar on here. No, sorry, I'm just going to find it. There you go. Right. This is the INFINOX calendar that is on our website. And you can see here all the entries to look out for. As I said, tomorrow, we've only got a few sort of lower tier data. You've got building permits, you've got housing starts, you've got weekly jobless claims. These are all things that might produce a little bit of volatility for dollar positions, but not it's unlikely to have massive impact on the dollar. But yeah, that is what we're looking out for tomorrow. And just a few, you do have a few Fed speakers as well to keep an eye on, but not too many. Now, thank you very much for coming today. Now, what I was going to say was, if you're on the YouTube live link, then go to our channel. You can subscribe to our channel. You can also click on the bell to receive notifications of the webinars that we do. I'm going to be doing this once a week on a Wednesday, 4 o'clock in the UK, and that is something that we're going to be doing now going forward. We used to do it earlier, but we're now changing it to 4 o'clock in the afternoon. to give everyone a chance to, well, get a little bit more, basically, after work, people can come in and just relax and just watch the webinar and get a gauge of what's going on in markets and what to look for in the next couple of days or so. So that's what we're going to do, 4 o'clock from now on. But as I said, join our YouTube channel with the subscription button, and click on the bell to receive notifications. So what I will do is I will wish you good luck now, and I will speak to you all next time, next week at 4 o'clock. So good luck in your trading, everyone, and I'll speak to you then. Thank you very much.